Hello everyone, this is Juan Sarmiento and today is Friday, August the 11th. Okay, so this account so far so good, about $8,000 in profits, give or take. And now that the markets have begun a little decline, now it gets interesting because as the market has been going up, this strategy works as well as any other. Except perhaps for owning the stock alone, because when the market is going up, everything is great. But now that the market is going down, let's see what happens. Let me just take a quick look at the SPY. And if you want to look at my view of the market, please check the SPY series, in which I discussed a bit of what the market I think is doing, what the trend is. Okay, I'm going to organize my stocks. This is the, let's go first to the IRA account, and then we will do the trade, the same trade that we would do here for the IRA, we would do for the margin account. Let's start with APA. Okay, the stock is moving very nicely to new highs. Okay, let's see what we have here. And here we have that the next expiration here is on the for the call is on the 8th of September. Well, that's a while from now. So I see that I have this August. So obviously I did make a trade here last week. So let's go back 7 days, or let's say 10 days to make sure that it shows up. Yeah, you can see what I did, right? From August 11th to September the 8th. So let's analyze that. Okay, so this is a debit. You see the negative, normally you will get a credit, but because I rolled it up, I was 37 and now I rolled it up to 43. So what happens is it actually costs us money. But believe me when I tell you that I just sold the 43 September the 8th call, which has extrinsic value that it will go to zero. So yeah, we are paying for the stock as it goes up for the option because it has intrinsic value and is gaining, but we remember that we do have the stock, so those pretty much compensate each other. But the extrinsic value, that's going to go from whatever I get to zero. Usually I get about $500. That's my goal, generally speaking. Okay, so what do we get here now? I'm going to say analyze trade in order to reproduce this trade as it was, and then I alter the date of expiration to September and the expiration to the strike price to 43. And that's my new trade. Okay, so then I use the calculator here just to make sure that you see clearly what I'm trying to do. The original price was $30.46. I paid $3.80. We have to add that because it's a debit. It's negative because you were expecting a credit, but go to debit because the strike price is higher. So let's add 3.80 plus 3.84. I'm sorry, I have to erase that. 30.46 plus 3.84. Copy that and put it here. This is my cost basis. So even though the stock went up and we have to pay some money, we are still well below the current stock price. So let's erase these two items, and now you can see what my current position looks like. Okay, we have made so far on this particular trade $2,323, but with a new trade I increased my maximum profit to $2,600. Okay, so you can keep on doing this, but I suggest you always look at the extrinsic value of the option you're selling, and hopefully that will give you $500. Okay, here we are. You can say analyze the opposite to see what the value is really on the market if you were to close that position. We're going to examine all the others as well. Let's start with follow up with this coin, and you can see that I have, this is not traded, but let's see what we have. Say show all. Yeah, we did have a trade same way that we did for the APA just now, we did for the coin. So in this case I paid $10.80. Let's copy that. So we adjust our trade here, analyze duplicate, curious that the price is not displayed here, August the 4th, because August the 4th is essentially gone. But these two prices together should give me the final. So let's analyze duplicate. Let's just say analyze trade here. Okay, that's the current trade, but the price should reflect these two. So let's hide position, and this is my current trade plus here, plus the rollover that I did. I can adjust that by putting here September and the price 91. Okay, this price should reflect these two together. So my profit is $2,016.92. Okay, I can use this, go to the monitor tab and go back, let's say 100 days. Okay, you see the prices here, debit, debit. Okay, so let me bring that calculator again. And we're going to add this all up because they're all debits. You see that? Debit, debit, debit. Okay, even though it's negative, plus 13.4 plus 10.8. That's the total cost. Okay, let's go to the Analyze tab, and here I have, that's my final price, 68. Okay, that's my new trade. It should be identical to the other two that I have here. Okay, so maximum profit 27. Okay, let's see if that's, if it looks the same. Yeah, 27.83. So then I can delete this. So if we were at 91 and now we're 81, we have lost a little bit on that. Okay, but remember, we don't care because we, you know, we just accumulate the extrinsic value, and we hope that the stock eventually will go to wherever the stock is going to go, very much like the original. And here, if I felt that I could roll it over to a lesser option, if it's worth it, then we could do that. Let me show you. I will go here. Okay, 28 days to the expiration of the option I own, I sold rather, and it's right here, two of them. You see that? The extrinsic value is $3.37. If this goes to zero, we accomplish our goal, okay? And then we will go and sell something at a lower strike price with more intrinsic value. But we just wait until this becomes zero, okay? In the meantime, the stock can go up, can go down, we don't really care. And I think actually it's sort of bottoming out here, gonna perhaps hit the Ichimoku cloud and bounce back perhaps to test the high. That would be my guess on it, but you can have your own opinion. Let's go to Etsy. This stock has been going dropping and dropping. So this one is the opposite of what you would hope. You would hope that the stock stays high or stays at a certain level or goes higher. Let's go check it out. Okay, so yeah, let's extract our, see that here. Yeah, So in this case, we got a credit because the stock has gone down, and I rolled it from 100 down to 83. So we get a credit here. Okay, so let's analyze that. Change this to 83. And what is our expiration? The 8th of September. And what is our price? 83.12 minus 83.12 minus 4.28. That's our new price. There you go. So we can hide the position here, and you would see that with the risk profile, this trade, the two put together, is a loser. It looks like a loser, doesn't it? But in reality, it doesn't matter. Eventually the stock will go up, or so you would expect. If not, we keep on collecting premium right there. So our loss is $388, okay? It doesn't matter because this is just one day, and we are collecting the premium every month. So eventually you would see that we would always end up positive. Not all the stocks will be positive all the time, but it would be enough to make a profit, or so we expect. That's what we're here testing, this theory. Okay, all right, let's move on. Let's go to FL, and this one, yeah, this is the same. No need to change anything. It's not even close to expiring or anything. Let's go to KS. Okay, this one here is expiring today. Okay, look at that. All right, so we need to close it anyway. So we can say analyze rolling. Okay, but what do we roll it to? Well, let's look for it. What option do we got? Something like, what option do we trade? Either one of these two. Let's go to the 15th, okay? And I'm gonna look for the extrinsic value is 122. So I'm gonna click on the bid, and I'm gonna say 4. Okay, so there is no intrinsic value. So if I display only the option here, I would see my extrinsic value. Let's look at the risk graph, and I say 4. See, 4. And how much am I going to get? $484. Very close to 500, which is our goal. And yeah, I'm going to do it. Going to do the rollover, and I just need to put the 30 strike price. You can also, let's do the other one as well. Go to the one that expires on the 8th of September. See if it's any better. Might be better, might not. Let's go over here. I know for a fact that it won't be, because the more time, the better the extrinsic value. Okay. You see the 192? Hey, that looks better. Let's look at the risk graph. Right there, $768. So what gives? Well, it means that the option that is closer to us is actually more valuable because there is an earnings coming up. And that option is on the 28th, right after the earnings. So that's going to be more volatile at the time. So I'm going to do it with this 28, okay? 28 call. Oh, the other thing is that because the strike price is very, very close to where we are right now, yeah, that's why it has more value. Okay, so that's great. Well, then we'll do that, okay? We're going to sell the 28th, September the 8th, we're buying back this one that is today, closing today, expiring today, and we're going to buy this one, and we get a debit. We're gonna pay $1.54. And you wanna see what it looks like? Let's say hide the position. We're gonna do, this one is what we have made so far, $1,064. How much will we make? You need to say expiration, second expiration, and then here it is. We would make $1,848. Hey, that's pretty good. We're made close to 1,100, and we could make 1,800. So I'm gonna do this. Oh, and we need to do it for both accounts. Did I just send a trade? No, I haven't sent any trades. So I'm gonna send this trade for the two accounts. Create duplicate order, confirm and send, multiple accounts, and we're gonna do 4 for each account. All right, and you can see that the IRA has more effect here, is not. Okay, the margin is power effect is 0. Here it's subtract 600. Okay, let's do that. Okay, I expect this to be filled sometime soon. We'll check on that a little later. Let's go to MOS. MOS. There is plenty of value here left. If you go back to the margin account, to the IRA account rather, and you see that the magenta line says 1659, and we're expecting to make 1796. That's the this line here. Okay, so the difference is quite wide. You know, it's more than, is about $150. So yeah, no, I would like to keep my $150. Thank you very much. So we just wait a couple of weeks. Let's go to MU. Okay, this one is expiring today. It's 62 is my strike price. Okay, so it's expiring, so we're gonna close it. So what do I sell? Let's look it up again. We look at it on the 28th again, and here is my extrinsic value, so I'm going to click on the bid, and I will get $2.28. What if I did the 35? $2.64. Okay, so let's look at the risk graph, and in this case, I'm not getting much. The volatility has dropped on this stock a lot, and I'm trying to make it up because we had a loser. This is the trade right now. We have a loser, so I'm trying to compensate here. Okay, we'll experiment, right? Nothing wrong with experimenting. And so I'm going to do the rollover, and if I do the September the 8th, I only gonna get $226, and I was hoping to get 500. Okay, this is a little better, but not a whole lot better. Okay, so I'm gonna do this one here. 65, is that my trade price? Yeah, so let's do the 15. I would say, in this case, you should consider, would I have a better position elsewhere? Perhaps you do. And the better position, make sure that the other trade that you are entering, substituting for this one, you would actually get $500 or more than that, what we're making for this one. Okay. And here we have, we're gonna sell the 65, September the 15th. And in this case, we go from negative to positive. So I'm hoping to make $265, at which time I probably quit. Because, okay, I broke even, or yeah, better than losing money. Not losing a whole lot, so you shouldn't feel too bad about it. But just to demonstrate, okay? This is for demonstration value that I'm doing this rollover. So this should be the same in the margin account. Yeah, it looks identical, so I'm gonna send the same trade for both accounts. Create duplicate order, confirm and send. And I say multiple, and I'm gonna sell both, like that. Send. Hopefully it will happen. I'll check on that a little later. In the case of, in this case we just let the thing, never got my call filled. That's terrible. That's giving me more loss than I should have gotten. Okay, let's just sell the next one up quickly before we waste any more time. Obviously you need to keep an eye on that. That's MU, got filled, good. Let's keep on doing this. The SP, this stock has been really going down, and I should have kept my eye better, because as it goes down, it could go to zero. At least compensate a little for the loss by selling your calls along the way. Okay, which call I would sell? This one here at 9. Let's click on the bid. Well, that's the September the 23rd. September 15th. Okay, what about September the 8th? In this case, we have the 8.5, which is closer. Okay, that was the KSS. Okay, let's try this one here. Bid. As you can see, it's a whole lot more. Why? Well, because it is closer to the strike. The strike price is closer to the current price of the stock. Okay, so what I'm going to do is do this one here. And if we sell 9 calls, we could see how much money we're getting on the extrinsic value. We're getting 387, not a whole lot. Okay, so I'm gonna do 9 of those on each side. Let's put that 45. And in both accounts it should be 9 calls. Okay. All right, there it is. All right, so this is what we have. Unfortunately, this has not worked out very well. But I think it's, other than that, we've been doing really well, except for SPY. As you can see, our loss is our loser, our big loser here. Everybody else has been doing fine. Even this Etsy has not been that bad. But others have more than compensated for the difference. So we are here at $15,655 for the 2 accounts. Let's go to WDC and analyze that. And this is August 11th, another one that expires today. Right here. Okay, so what are we going to do? Choose the right option to roll over to 42 strike price. Let's look with 28 days. The one that has 0 is this one here. Let's click on the bid. Okay, we're going to do 3 of those to find out how much money are we getting for this operation here. Here, how much am I getting? 459, much better. It's not 500, but it's close. Okay, what about if I went to the next week on the 15th of September? Here it is, 42 and a half. Yeah, we could do 42 and a half. Click on the bid and look at the risk graph. Okay, so this is 462, the other one is 459. I'd rather do that 459 even though it's less, because it's less time to expiration. Okay, let's do that, and we're simply going to roll it over. So I'm going to say analyze rolling. Okay, and this we need to close, that is expiring today. So we're going to sell of September the 42. That sounds good. We are closing this one here. And let's click here. That's my current position. And this is my new position. You can see the magenta here, no, the cyan is the current price, current value. If it goes to the yellow, the maximum is 1461 versus 961. So that's pretty good. Okay, we're gonna do this rollover for both accounts. Confirm and send, say multiple, and I'm gonna put both. I'm doing 3 for each. Okay, we wait a little while and see if that's gonna fill. Otherwise, I'll let you know how to do it. Okay, how to evaluate. Let's go to X. Okay, this has been doing well. Okay, September the 8th, plenty of time for expiration. Okay, let's go to over here and go to the margin account, and I want to see my last trade because I want to account for the entire position as it is right here. You can see that last time I closed the August and I sold September. Yeah. Let's just go over here and look at the value here and use this to evaluate our accounting here. Okay. The easiest thing is to come over here. We have 3 trades. Sorry about that. We have three trades, and debit, and credit. Okay, so the debit is 1969. Okay, plus, because it's a debit, we add to the cost, and then next one is a credit, so minus 0.95, 21, 20, 34, and of course the value needs to be adjusted for us to see. Okay, so August, September the 8th, and 25 is my strike price, and I'm going to put the resulting value right here. Okay, then you can see exactly where we are. High simulations, high position rather, and here it is. Okay, so far we have a profit of $567. Okay, so that's about it. Let me make sure that I have all my trades here organized. Let's say all, and WDC. Okay, I can adjust this because you see my debit is 229 versus 231. So I say cancel, replace, unlock, and send again. And do the same for the other account. Cancel, replace, unlock, and send. And I'm going to let it be until it gets filled. Both of those trades, I'll check it out a little later. Okay, that's about it. Let's go to the account once more, and here's my value. Okay, not bad, not bad, in spite of the decline lately. We just keep on collecting those We keep on collecting those premiums. Eventually, we will be back up in the plus. Okay, that's all for today. Thank you very much for joining me. See you next time. Bye-bye.